What's up, you guys? Welcome back to the channel. In today's video, I'm going to go over why NIO has actually been down this last week. And I'm also going to give you guys an estimate on what NIO's earnings could be at the next earnings call and what some analysts are predicting for earnings. Also, make sure you guys stick around to the end of the video because I'm also going to give you guys a couple catalysts that I think is really going to help propel NIO up and help push their share price up in the near future. But before we actually get into the video, for those of you who are new here, my name is Evan and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it. And it lets me know that you guys enjoy these videos every day. So again, if you guys wouldn't mind hitting the like button, I would really appreciate it. Now, for where NIO's trading today, they're actually down about 2%. And I don't think this is coming as a surprise because one of the big factors that's affecting not only NIO, but quite a few stocks in the electric sector is that the entire market has been trending down the last few days. I think some people forget that the entire market affects NIO, and it's not just these catalysts that come out that affect the share price up and down. And so with the market trading down over the last few days, that has been weighing on NIO, and NIO's down about 6.7% over the past week. They had hit a high this week of about 46, and their low was right around 42.80, and right now they're at 42.90. So they're really not too high above their low, and it looks like they're really bouncing off the support line right around $43. But I think if they can hold that, we should see NIO bounce off of this, and then they should start climbing up, especially with those two catalysts I'm going to mention towards the end of the video. But other than the whole market being down, there's a couple other reasons as to why NIO stock is down today and why they've been down over this past week. And one of the main reasons is because of DD Global. And this is because there was growing concerns about the US listed Chinese stock. And since the Chinese government took action against DD Global and other recently listed stocks last week, this has been trickling over into a lot of other Chinese stocks like NIO, Xpeng, Li Auto, and a few others. But basically what happened was the Chinese government said last week that they launched a cybersecurity review on Didi and other app-centered Chinese companies that have listed on the US stock exchanges this year. And this also includes Kanzun and Full Truck Alliance. And regulators appear to be very concerned that the audits and the oversight required of the US listed companies is going to somehow compromise the security of Chinese consumers' personal information. Now, it's not really clear as of right now if those concerns should or will extend over to NIO, but NIO does provide an app for their customers, but we know that they're mostly a car maker. They're not centered around an app, and that's not their main business model. And they've also been listed on the New York Stock Exchange since 2018. So they've been around a lot longer than a lot of these other Chinese stocks that are drawing concerns and are getting cybersecurity reviews. Now, over the past few days, this is likely one of the reasons why we're seeing NIO trading down. And NIO themselves haven't really had any positive or negative news other than some minor news about a new director who was appointed earlier in the week. Now, there is a concern raised by this whole Didi situation, and it's that the future Chinese government's actions could limit NIO's ability to raise cash from US investors. Now, of course, this isn't going to be ideal if this were to happen, but NIO does have other avenues to raise cash, including a likely future listing on Hong Kong's exchange. In the meantime, NIO has plenty of cash on hand, and they do have a strong order book and 2 new models coming next year. So at least as of right now, this action against Didi probably isn't going to be enough of a reason for auto investors to sell out of their positions of NIO. But it is hard to predict when you see a stock dropping 4, 5, and 6% in a single week, and sometimes in a single day. I think a lot of people do get worrisome. But something else that also happened recently was that there was a lot of hedge funds, 6 to be exact, that actually sold out of their positions of NIO. Now, I don't know if you guys are aware, but I covered this in a recent video. At their peak, there was 35 hedge funds who were investing in NIO. Now there's 29 or less, and there could be a few reasons why they're selling out of their positions. And some people are anticipating and thinking that they're having to cover their positions from GameStop and AMC. Now, I don't know how true this is, but if that were the case, they're probably going to buy back into their positions in NIO, probably in a few months' time, and then we should see NIO start picking up. But this kind of leads me into my next point, and this is about the earnings projection for NIO. And right now there's a projected earnings on Yahoo Finance of negative 65 cents per share and revenue of 5.19 billion. And this would represent a change of 1.5% and 115.7% respectively from the prior year. And if you guys have been following along with analyst estimates, it's pretty important to note that the recent changes from these analyst estimates for NIO typically reflect the latest short-term business trends. and these types of things can change very frequently. So with that in mind, we can consider positive estimate revisions a sign of optimism towards NIO's business outlook, but it does seem like research indicates that these estimated revisions are directly correlated with near-term share price momentum. And taking all that into consideration, now I want to get into the two catalysts that I think are really going to help prop up NIO's share price in the near future. But starting off, I kind of want to give you guys some background because we know NIO started pretty rough after going public in 2018. But fast forward to 2021, and they've had a pretty decent year. Of course, we know they spiked up to about $67 back in January, and that was after their NIO Day event, and I think a lot of investors expected NIO to pull back from that high. Now, whether people expected NIO to pull all the way back down to $43, that's hard to say for sure, but you could look at this as a buying opportunity, seeing as though they're getting close to half the price of what they were trading for in January. And despite the whole pandemic and the chip shortage, NIO's still been able to maintain pretty strong delivery numbers throughout all that's been happening. They are constantly expanding the market, and they remained very patient through the ups and downs. And right now, NIO is one of the most sought after EVs. Even despite these hedge funds selling off, I think it's giving a lot of smaller investors more of an opportunity to get into NIO and buy them for a much cheaper price than they would have before. And NIO went from $13 in July of 2020 up to $43 this year in July of 2021. They're up more than 200% over the last year, and other than some slight pullbacks, it doesn't really look like they're stopping the momentum anytime soon. And I don't know if you guys know, but NIO had a NIO Power Day event last week, and the company announced their expansion plans to grow the battery swap station deployment, and this is known as NIO Power 2025. They're planning to expand the swap stations to 4,000 by the end of 2025, and this includes 1,000 outside of China, and they already have 301 swap stations and 204 fast charging stations. And this is one of the things that I think is going to be a big catalyst pushing NIO up, not only in the short term, but over the next 5 years as well. Because additionally, they also have 382 destination charging stations, and they aim to increase that to more than 700 by the end of this year in 2021. And the reason why this is such a big deal is because the swap stations generate additional revenue for NIO, and they attract customers to their service. The long-term goal of establishing 4,000 stations is proof enough that the company is in line with the market and considers a rising demand for their EVs. And the additional revenue generated by the swap stations is going to contribute significantly to their balance sheet. And given some time, these battery swap stations are going to be easily available to more users, and they're going to provide a quick and convenient way of charging. Now, one other thing that I think is going to have an effect on NIO and a lot of other EV stocks is actually the government's plan to work on incentives towards purchasing electric vehicles. There's also going to be more support to install EV charging stations across the country, and besides just NIO, several other EV companies are going to benefit from this, and as a reflection, NIO stock could become more expensive. NIO is definitely making the right moves to maintain a strong hold in this industry, and they've also announced several positive catalysts and developments this year, and these range from an increase in production capacity to record-breaking delivery numbers and an expansion into Europe. It seems as though everything is working in favor of NIO, and the stage is really set for them to increase and set a new all-time high. As the demand for EVs continue to grow, NIO is definitely on their way to establishing themselves as one of the top EV manufacturers, and I don't think investors should be nervous about the latest Chinese regulations until we get a little bit more clarity on what's happening exactly. Because just like the delisting fears that people had a couple months ago, I think the threats about these new regulations are going to fade with time. And until then, personally, I think NIO stock is a buy or a hold, especially if you have a relatively high cost basis and your average share price is something above $45. Because with NIO trading below 43 as of right now, that'd be a good time to bring down your average share cost, especially if maybe you bought in at the very all-time high above $60 and up to 67. As long as you believe in NIO long term and you have a very long-term bullish outlook on NIO stock, I don't think there's any reason not to buy in. Now, of course, you guys know I'm not a financial advisor, and I don't have any incentive if you guys buy NIO. I don't benefit from you guys buying it, but I just want to go over stocks that I think have a bright future. And NIO stock is one of those stocks that I think does have a very bright future, and I think their share price is going to reflect that over the coming years. Now, for those of you who made it this far into the video, I want to know what you guys think about NIO stock by the year 2025 and what your guys' estimated share price is going to be for the year 2025. Personally, I think NIO could be trading anywhere between $150 and $200. Of course, I don't know exactly, and that is kind of just a prediction. But let me know what you guys think down in the comments, because I'd be curious to see what you guys think and where you think NIO is going to be in the next 5 years or so. Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll actually get 2 free stocks. And if you guys enjoyed the video, make sure you leave a like, because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.